talk about it, right? If you own tech growth stocks, if you own crypto, you have probably got decimated over the last couple of weeks. This week was probably some of the most brutal it has been. Even the large tech companies like Apple has dropped a decent amount. I know Google from its all-time highs has probably dropped about 20%. So those are very big swings for these massive trillion-dollar companies. So what is happening and why are these different things happening at this time? So a lot of it has to do with people's expectations of the future. It has a lot to do with trying to combat inflation, right? Inflation is still at a very high amount, and it's at a very high amount for a lot of reasons. Combination of supply constraints, combination of the war in Ukraine that continues to be playing out, combination of so much money that has been printed and accumulated over the last couple of years. And so there's a lot of factors that the Fed has to keep aggressively increasing interest rates to have a chance to try to slow down inflation. Now, there are signs that inflation is peaking, but until it actually declines, I think we're going to be going through this for some time. And so what does that mean? It means if inflation and because of the interest rates are a specific amount, that cascades down to the growth companies that will be impacted because their valuations had initially been very sky high. When interest rates rise, people have to make the decision, okay, do I want to then, does it make sense for me to go after these lofty goals and projects or startups that are unproven, or do we want to go towards a flight of quality? And so we see a lot of that happening right now where it's a flight to quality that is happening. But even the flight to quality will take an impact as those that are these hyper growth, money losing machines are in trouble. So what does that mean though? As you can see, a lot of those other companies are scaling back, especially startups. I know Peloton took a huge hit. But then again, they were losing a lot of money. You look at Coinbase, they got absolutely decimated. You have Robinhood, you have all these different companies that had taken quite a beating, and they are going to be laying off people. It's not going to be a surprise there. But what does that mean for big tech? What happens with big tech? Now, Meta has been interesting, right? Because Meta has still been earning a lot of money. They've been slowed down their growth, but they're also making a huge bet towards their AR/VR group. So their AR/VR group has spent and lost a lot of money, a couple of $1 billion, even though they're still earning a lot. However, at the same time, they understand that they grew a lot in the first quarter. So they are freezing hirings. Now, we have not seen any signs yet, if there will be, of any layoffs, but there will not be any more hiring for a specific set of people within Meta. So that's something to be mindful of. You have the news of Twitter. So Twitter is interesting, right? Because that's the downside of Elon Musk buying the company. Twitter for a long time has not been doing very well. Take a look at their stock performance and you can see for yourself. However, they've been able to kind of coast around. So I've seen a lot of articles and it makes sense. If they're just kind of just pushing around, getting paid a lot, doesn't really care about earnings and things like that, then a lot of the employees actually have pretty good lives there. They were talking about all this flexibility and all this kind of stuff. And when Elon Musk made the move to buy it, the very first thing he said he was going to do is he's going to cut a lot of people because a lot of people were not needed to even be there. So a lot of execs got cut. A lot of employees are expected to be cut. I think he mentioned he wanted to cut about a couple of thousand employees, which is maybe 20%. He did say over time that he will help grow that to a couple more thousand employees more. But for now, he needs to trim a lot of that bloat, and so that it's a better run company. And if you know Elon Musk, he runs things very efficiently, and he wants people to work hard. And so if you think about the Twitter atmosphere, I think the culture and the environment of employees there have been, quite frankly, pretty relaxed for a long time. But make no mistake, not anymore. And so there are cons when these kind of things happen. The way that you should think about this is like it's no different than a hostile takeover in these like big hedge funds that buy a company, trim the fat, make it lean, repurpose it, and then put it out. People forget that just because Elon Musk bought it meant that that wasn't what he was going to do. It was definitely what he wanted to do. And people better be aware. And I'm sure a lot of people are very nervous within Twitter. Now, the thing about this, though, is not every company, even where we're at right now and all the hits that have been, there are still several companies that are going to continue their aggressive growth. Take a look at Google. So Google is a huge bull of this. This was an interview, and I highly suggest you watch it on CNBC. This happened on May 12th. It was literally not long ago. So what were Google plans? Google initially made the plan earlier this year that they want to bring in another 12,000 people this year, right? That's a massive hiring speed. And he said this as recent as this week. While all these news you have been seeing or happening over the last 1 or 2 weeks, Google is going to use this as an opportunity to land grab talent. And that's the thing about what we have seen with corporate real estate space and what we now will see with hiring for those that are doing well. So companies like Google, another company like Apple, I'm sure companies like Microsoft, they're all in the same boat. Their balance sheets are extremely strong. Yes, their top line may take a hit, but if they're continuing to grow as they were, and they need a lot more people, and they also have a lot more projects to take on. So this is a great opportunity where other people are laying off potentially talented people back to these companies. Now, I want people to also understand, where did a lot of these companies go? Like, where did these employees go? Where did a lot of execs actually lose talent to? Think about it. They didn't actually lose to too many startups, even though they have. The biggest culprit were crypto companies. Leave it in the comments below. Did you make a move to a crypto company because of the promise of the future? Do you know, how many people do you know, leave in the comments below, that work at a crypto company and got leered because of very high pay or potentially high bonuses? And so that was actually a lot of the brain drain was actually through the crypto markets or those companies. But now that those crypto companies have been decimated and they are just like a high growth tech stock company that are growing at all costs, this is an opportunity for them to Google for able to bring back and attract those people that they have actually lost over the last couple of years. And so they are using this as an opportunity while other people are fleeing and being very conservative. Google has clearly the balance sheet. If you look at their profits, record revenue, record growth, and they're still continuing to do it. And if they're the only ones hiring, make no mistake, they're going to get a lot of great people and talents. And Apple will be the same way. So don't be surprised there.